Hey gang, Carl White here, broadcasting from the secret headquarters here at the Mortgage Marketing Animals. And you're listening to Loan Officer Freedom, #1 podcast in the world today for loan officers. And Owen, I can say that because it's actually true. It's actually true.
I love that.
Yeah.
I love that intro.
So you're listening to the right update. If you want to hear an update on Triggerlead legislation, that my suspicion is 100% of the loan officers listening to this are for an update on this or for
Yes.
legislation on this. So, Owen, what's your official title with the association?
I am heavily involved, Carl, as you know, in the Mortgage Bankers Association. And so I actually have three jobs for the Mortgage Bankers Association right now. I am the 2023-2024 MORPAC chair. That's the Mortgage Bankers Association Political Action Committee. I coordinate the fundraising efforts for the Political Action Committee and help oversee who that money goes to. So obviously Triggerleads is playing a role in that. I'm on the board of directors for the Mortgage Bankers Association, and I also co-chair the Independent Mortgage Bankers Executive Council. So three hats for the Mortgage Bankers Association right now.
All right. So where does Triggerleads fall into this? Like which hat are you wearing when we're talking about Triggerleads?
So two of the three, Triggerleads is a huge effort for MORPAC, the Political Action Committee. We being the Mortgage Bankers Association, had our national advocacy conference just a couple of weeks ago, the last full week, or I'm sorry, the second to last full week of March. And we got 375 mortgage professionals to Washington, D.C., and we had 255 individual meetings on Capitol Hill, and Triggerleads was our #1 topic in all 255 of those meetings.
Okay, very good. So, for somebody I think everybody knows what Triggerleads are, but just in case we have a handful of brand new, fresh to the industry loan
Perfect.
officers, explain to us what a Triggerlead is.
Well, actually, so we all know when we pull somebody's credit, right? All the information contained in the credit report, the credit score, delinquencies, good credit rating, bad credit rating, whatever have you, is all private. But what's not known, or at least not really known outside of the mortgage industry, is that while all the information in the credit report is private, the fact that the report was pulled and for what purpose it was pulled is not private. So the credit bureaus go ahead and the different compiling companies sell the information, right? Hey, here's a person, Bob, and Mary Smith of 123 Main Street in Anytown, USA, are just had their credit pulled for purposes of a new mortgage. And so obviously that is a piece of information that has some value in the open marketplace, and that is what is considered a trigger lead.
All right, and let's talk about one of the like some of the problems with that happening. So, like,
Right.
tell us about the one case study that you did from somebody within your own office.
Correct. So we did a case study in our office. We had a young processor, newly married. She was getting ready to buy a house. We just straight up pulled her credit. We put all the correct information in there. I know there's a lot of people who think that you can manipulate the information that you put in there so it will be sold less often. That sometimes works, although it's becoming less effective. So we counted, after we pulled her credit, 198 phone calls, texts, or emails in 48 hours. And unless you've had your credit pulled for purposes of a mortgage in the past, say, 24 to 36 months, people in the general population, the general public, and certainly in Congress had absolutely no idea that this was an issue and that it was going on. But yeah, Carl, we had 198 reach outs in 48 hours.
And some of those are a little tricky that they try to make it like, let's say I was applying for a
Hmm.
loan with loan officer, and I know you own the company, but let's say it
Correct.
was loan officer Owen Lee of
Yep.
Success Mortgage Partners. And so I'm doing my loan through you, and then the credit bureaus sell the information that I've done a credit pull with you, that the person receiving it, the person that bought that, which might be Bank of XYZ,
Hmm.
right? Loan officer
Yep.
Lisa, whoever, Larry, Beck XYZ, they then bought the information that I had my credit pull, and some of them use kind of sneaky tricks. You want to talk about some of
They
those sneaky
are.
tricks?
Yeah, and we saw some of that in our test. People will call up, and I've seen people call up and say, "Oh yeah, hi, my name's Joe, and I'm working with your loan officer." And they'll like purposefully stutter, and then the borrower will go, "Stephanie." "Oh yeah, I'm working with loan officer Stephanie." Because if you don't have your guard up, why wouldn't you say that?
Yeah.
Another one we see, and this one is probably seen quite frequently, is somebody calls up and says, "Hi, I'm Jim, and I'm working on your mortgage. And in order to advance your mortgage application, I will need the following documents." And you would be amazed at how um, readily people will share private financial information because the general public's guard is not up. And now you just sent your information to somebody's got nothing to do with your original credit pull, and they start processing your mortgage. And at some point in time, call you and give you a quote. So there's a lot of people, there's some kind of altruistic people who say, "Oh, well, the more calls that you get, the more competition, the better the deal that you're going to end up with." That's not what's happening. What's happening is not all above board and far more than any person can reasonably be expected to navigate.
Yeah, especially when you talk about 198 different
That's
reach out
right.
or pieces of people that were contacting her in different modalities, text, email, phone calls. It can be overwhelming and very confusing for sure. So,
Yeah. Well, when we were on Capitol Hill, we would explain it to the congressperson. Probably about 50% of those meetings, the congressperson shows up. You might meet with their legislative director, which is kind of like their chief of staff. Or if it's a senator, they usually have 3 or 4 assistants that concentrate on different areas. So you'd be meeting with the finance person. But you would tell them, you just have to imagine this, right? We all know what CRMs are, right? Everybody in this podcast, listening to this podcast, knows what a CRM is. Well, what happens is these companies, they might sell that piece of information 10 to 15 times, the credit bureau, and then they'll just dump it into a CRM. Everybody knows that you got to hop on that Triggerlead right away. So they might have 10 to 15 automatic reach outs, phone calls, emails, texts. And when you do that math, right? Oh, I sent it to a dozen people, and each one of the dozen people had 15 reach outs in their CRM. It doesn't take a whole lot of math to get to 200 in the first 48 hours.
yeah.
And people just had no idea.
So let's give an update. You and I, gosh, I don't know, 6 months ago or so, something like that. I think
Mm-hmm.
we did, if I remember right, we did an episode on this where there was legislation being introduced to limit trigger leads.
Yep.
And I know there's two different bills. So let's talk about let's just give an update. So
Mm-hmm.
so what's been happening in the last 6 months?
So actually, it's been very good updates. So the trigger lead bill was really first came out of a meeting of this group in the Mortgage Bankers Association called the Residential Board of Governors. And it's basically a group of people with inside the Mortgage Bankers Association that deal strictly with residential issues. And they really wanted to do something about trigger leads. So the Mortgage Bankers Association, through MORPAC, the group that I'm heading up in this campaign cycle, and a couple other of the professional lobbyists that work at the Mortgage Bankers Association, got the first bill introduced. And we've really made a lot of progress. Washington is a slow town, but in about 14 months, we've gotten bills introduced in multiple bills and then had those bills consolidated, introduced into both houses of Congress, the House of Representatives and the Senate. The House of Representatives is Bill 7297, which was introduced by John Rose, a Republican from Tennessee, and co-sponsored by Representative Richard Torres, Richie Torres, who's a Democrat from New York. And so that's our House Bill 7297. And then we have a Senate bill, a tandem Senate bill Senate Bill 3502, which was introduced by Senators Jack Reed, a Democrat from Long Island, and Bill Hagerty, a Republican from Tennessee. So to have bills in both the House of Representatives and in the United States Senate, and have those bills be the same, and have multiple co-sponsors from both sides of the aisle in about 14, 15 months is lightning speed for Washington, D.C.
Yeah.
Right? I'm not trying to be political, and I'm not trying to get into the R's and the D's and the blues and the reds and all that kind of stuff. But I think we all recognize that in today's political environment, almost nothing gets passed or gets advanced that doesn't absolutely positively have to be passed in order to keep the country running. So the fact that we've got, a Republican and a Democrat sponsoring the bill in each House of Congress with dozens of additional co-sponsors is really great, because a lot of times what will happen with a bill like this is it might not pass as a standalone bill, but you hear about these things called omnibus bills, or these gigantic bills where some politician will get on and say, I had 32 hours to read 1,700 pages of this bill or that bill. And what happens is they take a piece of legislation that must pass and roll up another bill into it and attach it. And that's the way things get passed. So we're actually in a position to potentially have that happen with this many co-sponsors from both sides of the aisle. And when I've lobbied in Washington, D.C. before, it's something I feel like we should all do as citizens and to try and make this industry better. But it's very rare that you go in there with things that are important to the house. Everybody wants to talk about housing because it's 1/6 of the economy. But to have an issue where it's able to be understood relatively easily and just common sense people agree, it's really a great lobbying point, and we had a lot of success with it in March.
All right. So it's looking like there's a good possibility that this new legislation is going to be rolled into something else that needs to be passed. Like
we're hopeful.
Or hopeful, right?
Yes, we're hopeful.
And let's assume it does pass. So if it does pass, what does that mean? Like, what's going to happen?
So what'll happen is, I wouldn't say that this bill is perfect, right? The perfect bill for a loan officer is obviously, well, nobody can have that information. I'm the only person that can have that information because that borrower is mine, right? That's the way we think about it. I've been in sales selling some product or service for 22 years. And I understand that that's the way loan officers think about it. And when I was writing loans, that's the way I thought about it too. That's not quite the law. So what this would amend to is that there are basically four groups of people that could have access to the information of the fact that that credit was pulled for a mortgage purpose, right? And that is any consumer or borrower who has authorized the solicitation, right? So that would be like an opt-in. If a borrower really believes that we're going to get all this competition and it's going to produce a better result, they can do that. But remember that we're going into a system where you have to opt in, as opposed to a system where everybody is assumed to be in and then you have to opt out. So it would reverse that. All right. And we all know as loan officers, we're on the #1 podcast in the world for loan officers. We all know as loan officers that that opt out process is one that is particularly confusing and takes a long time, when in today's technology days, it could be a lot easier. So that would be the opt-in. Number 2, the entity that currently originated the residential mortgage. That's the one we want. That's all of us, right? Number 3, the servicer, the mortgage servicer, would be able to be notified and buy that information. We have that system right now. And number 4 would be a depository institution or a depository bank or credit union who has a deposit on that customer or borrower. So it's really 3, because I don't think many people are going to do the opt-in. So we're taking this field, right? And I will say this, I'm not speaking for the MBA right now. This is not the official mortgage banker's position. This is only Owen Lee, member of the independent mortgage banker / loan officer community. But perfect bill would be us only, right? But a perfect bill is unlikely to pass. Once mortgage servicers and depository banks would catch wind of this in Washington, D.C., they would lobby against the bill. Those are 2 very powerful lobbies. So in Washington, D.C., a lot of times you have to think about what's the art of the possible, right? What can we actually get done? And, I don't know how everybody feels. I will have the loan officers that work at our company compete against depository bank loan officers all day long and twice on Sunday. Not to be dismissive in any way of those folks. They're excellent folks. But I think independent loan officers who originate their own leads, have a different thought process about prospecting and the work it takes to find potential borrowers. So we're taking a system right now that is utter chaos and borderline fraudulent, depending upon what people say when they get that information, to one that now only has really 3 people in the pool, and they're people against whom loan officers who are listening to this podcast compete very well. So I'm encouraged. Again, there's some naysayers out there. I get it that a perfect bill would only be the people that did their mortgage in the past. That's not likely to pass. That's more of a magic wand idea than a realistic idea. This is way better than the system that we have right now.
Yeah. So it'd be, if let's be optimistic. When this bill passes.
Yes. Excellent.
Right?
I love it.
That's just the way I operate, right?
Yeah.
So when this bill passes and I pull John Doe's credit, that me as their past loan officer, whoever the current servicer is, and if they bank at, and I'm just gonna say I'm making a name up here, Bank of Tampa. There may or may not be somebody by that name, but I'm not pointing them. But Bank of Tampa, that me as the loan officer, the current servicer of their current mortgage, and wherever they store their family bank account, that those 3 people would get notified that a pull was just made. But the big box, typically the big box lenders that are buying trigger leads, they would not be privy to the credit was just pulled, and we would eliminate likely 95% of all of those 198 communication to the person that in your office. And maybe it'd be 20 instead of 198.
Yeah. So, and I want to point out that it's really 4 groups, because people could opt in. I personally don't think that's going to happen very much.
They wouldn't know to. How would they even know to opt in?
100%. Total. Yeah. That's why I think it's going to be a small percentage, but it is there. So technically that's number 1. And then I would just put out everything that you said, Carl, was 100% correct. One important thing to point out is presumably these entities, right? The depository institution, the servicer, and our companies for our past customers would still have to buy the information, right?
Right.
It's not going to come automatically as a result of this law, but we would be the only parties eligible to buy the information.
Yeah.
So, you know, versus what we have right now, which is basically the Wild West. It's 95% cleaner. And again, everybody who's likely who's likely going to listen to this podcast, I know the kind of people that tune in to this #1 podcast in America for loan officers, the people that belong to Mortgage Marketing Animals or the Freedom Club or whatever, are typically a much higher quality prospector than the average loan officer out there. You who are listening to this podcast are going to compete very well against the other parties who are eligible to buy this information if and when this bill passes.
All right. I like this. So, and I think this is particularly timely because, correct me if I'm wrong, but generally I've noticed, and maybe this is just a quirk on me, I've noticed where the trigger leads really come into play isn't so much the purchase deals, which we've been purchase heavy for the last couple of years, and a little, a little refi light, not completely, but a little,
Yeah.
like in a normal market, I
Certainly
think
rate and term, right? We don't
yeah,
have rate and term refis right
yeah,
now, just mostly cash outs.
yeah, and I've always thought the trigger leads, they were like on a purchase deals, they it didn't seem like they were as interested in buying those leads as the refi, whether it's rate and term or cash out. That
Yeah.
they really go after the refis, and I think certainly I think we're closer toward a refi market than what we were a year or even two ago. That we certainly moved away from a refi market as a general rule last couple of years. And I think we're closer to moving back toward one of those as rates are
I
likely
agree with
to,
that.
we're having, I
Yep.
think, somewhere 2, 3 cuts coming up that likely will have some effect. So looking at this now, the timing of it could be really, really interesting. Because I think the trigger lead thing, I think, has largely kind of like I don't hear as many loan officers grumbling about it here lately, but it's because they've been mainly focused on the purchase, and so by
Right.
nature of them, they've been a little quiet. But now's the
Well, I
time to
think,
beat back the animal while it's hibernating in the cave. That's when
yep.
you want to attack this thing, not when it comes out of the cave hungry.
Well, I totally agree. A couple other points. Number one, I think part of part of us has just gotten used to the fact that this is going to happen,
Yeah,
right? And so we've talked to our borrowers. We have a way of counseling them. There are some tricks that people put in the computer to make it less likely that oh, the loan amount's $30,000. Nobody's buying a $30,000 mortgage lead, but technology's really found a way
yeah,
to get around those
mhm,
additional or original rudimentary hurdles that we all used to put in.
yeah,
Um, I think the other thing that really happened with this is if you think about the arc of the mortgage business for the last 5 years, right? In 2020 and 2021, when we had 3.5, 3, 2.75 interest rates, I mean, nobody needed a trigger lead, right? It was like
mhm,
going hunting where the deer would jump into the back of the pickup truck, right? You didn't need it,
yeah,
right? And but then what happened when 2022 came and interest rates started to go up and we had so many people in the industry and so many of those consumer direct based companies, some of the larger mortgage companies with consumer direct arms, right? They didn't all of a sudden want to get smaller quicker. So they started buying and doubling down and buying these trigger leads. And of course, these credit companies, hey, if I can sell this information 5 times, that's great. If I can sell it 15 times, all the better,
yeah,
right? And then we would put it in these advanced CRMs because the CRMs are getting better and better. So you take that market force and you take the fact that we all had stuffed pockets after 2020 and 2021, nobody wanted to get smaller. And then you overlay the technology. It was really a recipe for a hurricane for consumers. It's
yeah,
horrible. And I think that's when it just really got out of control. When you're on the Hill and you explain this to people, how it happens, Republicans, Democrats, blue state people, red state people, whatever, they all know that no reasonable consumer can navigate this. And that kind of altruistic, oh, now I have 10 offers that I'm going to get the best offer. That's not what happens when this tsunami hits the
Yeah.
average borrower.
There's so much trickery and a little bit of, I don't know, for me, a little borderline debauchery, going
Yeah.
on with all that, that it's like, it just makes it so confusing. So if we were to
Well,
put
to
a,
call it what it is, right? It's dishonest to
yeah,
call a potential consumer
yeah,
and trick them
trick them.
into sending
Yeah, trick them.
their
Yeah.
financial information.
So if we, any kind of a timeline on this, I know that's such a hard projection up in
Yeah,
Washington.
so that's where Washington D.C. really comes in, right?
Yeah.
Who knows that beast? Could be 6 months, could be 12 months. And I'd love it to be 6 weeks. In theory, it could be 6 weeks. It's really about being positioned to roll up into another bill because that's how stuff gets passed, and we're
Yeah.
in that position.
Yeah.
And we just have to see. I mean, that's why I would say I'm not a betting person. I wouldn't put money on it, but I'm very hopeful because we've gone fast as these things are generally judged. I mean,
Yeah.
this for a different bill or a bill that didn't have such bipartisan appeal, we're 1 to 2 years ahead of the normal timeline for this.
Yeah. Good stuff, man.
Yeah.
Anything I should ask you today that I didn't? Did we cover it? We covered okay?
No, I would just say this. If you want to get consistent updates on this bill and calls to action on when you can help, I would urge everybody to join the Mortgage Action Alliance, which is a group within the Mortgage Bankers Association. It absolutely zero cost to join. If you just want to Google Mortgage Action Alliance, and you can click on what the alliance does, is it takes information on your address of where you vote and stores it. And when we have a call to action, like, hey, we have to let Washington, D.C. know that this is our issue and it's advancing and we need to reach out to the people, it will send you some emails, and all you have to do is click yes, and your communication will go from you, the individual voter from back home, to your elected representative in Washington. And nothing moves the needle in Washington, D.C. quite like hearing from voters back home.
Yeah.
They're very clued into what their constituents care about. So I would encourage everybody who listens to this to just Google Mortgage Action Alliance, click on it and join. It's absolutely free. And then you too can become an advocate for this piece of legislation, because I really think it will improve our industry. Not only will it improve our opportunities, but it will improve our industry. Who wants to be associated with such a negative consumer experience, right? We should all want to get this passed.
Yeah. Love it, man. Hey, and Owen, thanks so much for coming on. Hey, just real quick for our listeners, Owen does a special something with us every Thursday morning at 8:30 Eastern time on the Loan Officer Breakfast Club, which is another free source. If you go to
Yep.
loanofficerbreakfastclub.com, every Thursday, Owen comes in, again, totally free. We have, 400-500 loan officers between the Zoom and Facebook Live, 400-500 loan officers each and every morning, and they're glued to their screen to see what Owen has to say. So on Thursday, so we do it Monday through Friday now. We just picked up on
Yeah.
Fridays, and on Thursday, Owen's our special guest, and he talks about market updates, where rates are going, any kind of legislation, kind of a like a business insider. And so,
Yep.
Owen, you do a great job on keeping us updated. So if you go to Loan
Well, I
Officer,
appreciate that.
yeah, so if you go to loanofficerbreakfastclub.com, and it'll give you the link to the Zoom meeting that we have Monday through Friday.
One thing, Carl, you and Frank Garay, Steve Kiles, and the whole gang that's associated with that. The one thing I will say is, when I look at my weekly calendar, there are very few meetings on my weekly calendar where I know I'm going to get energy from that meeting. And the one thing I would say to everybody listening, try it out, because I have more energy at the end of that event than I did when I dialed in. And that's a great thing to have on your calendar. So I would absolutely encourage everybody listening to the #1 loan officer podcast in the world to get on the Loan Officer Breakfast Club and get some energy in our day. It's a great thing, and I appreciate being on.
Which is the number one Zoom meeting for loan officers in the world.
Oh, there you
right?
go. There
Yeah,
you go.
it really is. So it's, I mean,
Yeah.
we have loan officers from all across the nation and even up
Mhm.
into Canada, literally from, we have so it's 8:30 Eastern. We have loan officers literally in Hawaii, which I think it's like 2 o'clock in the morning there or something
That's
like that.
crazy. Yeah.
So yeah, so it's a really cool thing. So loanofficerbreakfastclub.com, and be sure to listen in on Thursdays as Owen gives us an inside peek. And then Google Mortgage Action,
Mortgage Action Alliance.
right, to be help be an advocate
Yep.
for the let's beat up on the Triggerlead guys bill. Right. So
That's right.
good stuff.
That's
Hey,
right.
gang,
Officially, in official Washington, D.C., we are known as the Homebuyers Privacy Protection Act.
I
So,
like that. Good stuff. Hey, Owen,
yep.
thanks again, brother. I appreciate you.
Thank you, Carl. Always a pleasure.
Hey, for our listeners, do me a favor, send this episode to 3 of your favorite loan officer friends, and maybe to your branch manager or your company owner, so that they can get involved, and maybe send it out to everybody in their branch or in their division or in their company to help get the word out to help us battle on the trigger leads. We all win when this is finally passes. And like Owen said, this might not be the perfect version, but it's 90% perfect. And in DC, 90% perfect is like light years ahead.
Outstanding. Yeah.
And then we can chip away at the other 10% as time goes on. But let's get this first part first. So forward this to 3 of your favorite loan officer friends, loanofficerbreakfastclub.com, Mortgage Action Alliance. Thanks so much. We appreciate you guys. Thanks for all the positive reviews, and we'll see you on the next episode of Loan Officer Freedom. Thanks again, everybody. Bye-bye.